Let me ask you something. When you decided you needed a mortgage, what did you do? I mean, if you're like most people, you probably called your bank and look, maybe that worked out great. But if you didn't compare that number to anything else, you may have left money on the table without ever knowing it. So today I want to break down the three main types of mortgage lenders. Those are banks, credit unions, and mortgage brokers, because they all work very differently, and the right one for you honestly depends on your situation. First off, let's talk about banks. Banks are for-profit institutions lending their own money, and your bank loan officer can only offer you what that bank carries. Big banks have great technology, existing customer perks, but you know what? They also carry a lot of overhead. They have their branches, their marketing, and large corporate teams, so that overhead tends to get priced into your rate. Now, let's talk about credit unions. Credit unions are member-owned nonprofits. They return profits to members through lower rates and fees. So here's a little fun fact. According to the National Credit Union Administration, the NCUA, credit union 30-year fixed rates ran about 0.13% below bank rates in 2025. Doesn't sound like much, right? But on a $400,000 loan over 30 years, that actually starts turning into real money. They also tend to be a little more flexible in underwriting, which is very helpful if you're near the edge of a qualification threshold. Of course, you do have to be a member, but in Florida, that's usually pretty easy to arrange. So finally, let's talk about mortgage brokers. Mortgage brokers don't lend at all. They're intermediaries who shop your application across 20, 30, sometimes even 50 wholesale lenders. Wholesale pricing is lower than retail. Kind of makes sense, wholesale versus retail. But the same bank, the very same bank that might quote you 6.75% walking in off the street, might offer a broker 6.3% for the same exact loan. And the reason why is because, well, the broker is doing all the marketing and the pre-qualification work for the bank. So for VA buyers and self-employed buyers or anyone with a complex situation, a broker's ability to shop widely can be a game changer. Here's my honest take. Most buyers skip the comparison and they just use their bank, and it's easy and sometimes it's the right call, but my suggestion is find out first. Get a second quote. It costs you nothing and frequently it can save you thousands. For VA buyers especially, make sure whoever you're working with has real current experience with VA loans in Florida. The full breakdown is in the article, the link is in the description. I'm Ted Mosley with Orlando Nest, and I'll see you in the next one.